Hey there, welcome back to this week's episode of Finance Fridays. I'm your host, Lucas Bolahood with the Bolahood Group at Coldwell Banker RMR Real Estate, joined by our trusted mortgage specialist with RBC, Alexandra and I. How are you today, Alex?
Hey Luke, I'm doing great. Thanks for having me back.
Oh, well, it's a beautiful day we're recording today, and we're just keeping on the theme here from our last couple episodes, just around, the topic of interest rates, and that's a big theme amongst, conversations with my clients and obviously yours every day and dealing with financing. So last week we spoke about, how to lower your interest rate and essentially lower your payment through things like porting your mortgage, and how that has benefits to not only moving up in the market, but keeping a more favorable interest rate when rates today are much higher than they were a couple of years ago. And then splitting rates, which again is sort of segmenting or having a mortgage broken up into different segments on different terms for different interest rates overall. And that can also help lower your interest rate. So today, Alex, what did you want to talk about in terms of what other options are out there?
Well, I've got a couple of different things in regards to it does impact rate, and it's just really different types of financing that clients may not have thought about. So the first one that some people may or may not be familiar with is the interest rate buy downs. Have you heard of that before, Luke?
It's common in pre-construction, is it not?
Yes. So I'll explain. Your interest rate buy down, this is really for builders who want to promote and advertise a special rate for a limited time on a builder site. And I have personally seen it come across my Facebook. I saw a site that said 399 and it had a little ad there. And someone else came to me and said, is 399 an interest rate at RBC? At one time, absolutely, but that was site specific and it was an advertised rate by this builder. And really what it allows for the amount of interest to be paid up front to buy down and reduce the purchaser's interest rate for the term of the mortgage. It's just important to note that if you see that advertisement, it's negotiated between the lender and the builder. It's not something that applies to all files, but it can be quite beneficial for the client if that's an option on the builder site.
So this is essentially like a marketing tactic of builders where they're negotiating, let's say, a set fee for how much, like a lump sum payment per interest rate point that they're going to basically pay down and then give that benefit to the buyer.
And it is paid directly. It's not to the client or reimbursed to the client directly.
Paid to the lender.
It's paid to the lender, exactly. So that would be a contract that the client is signing into, and the builder has assumed some of that cost to reduce the interest charge for the term.
It's funny you say they're assuming the cost, because what I think ends up happening in those situations, in order for the builder to recover those interest costs, because again, it's marketing. They're trying to say, come buy this pre-construction property because you can get a lower interest rate and thus a lower monthly payment on the home when you take possession, however long down the road that is. But what ends up kind of happening is what the builder does is they just charge an inflated price. They work that into the purchase price anyways, whatever that fee was. Over the long term, as they do so many transactions, they're going to make all their money back. But it is a creative way that they can both help the buyer manage the payment a little bit lower. I look at that as a big marketing ploy for those.
Yes, it is.
And it's an effective one.
Yep, it is. So it's just something to be aware of if you're in the market and you're looking for a new build home. So it's just something that you can educate yourself on if it is something that you see in ads. The other option that I wanted to mention was the term of vendor take back. We've heard that before, but it is sort of a form of private financing. It's not something that I get involved in, but that situation is when the seller is going to provide the financing to the client that wants to buy their house instead of the traditional form of the bank. So the interest rate for that is usually higher, and there can be, such things as application fees or lender fees for it. But for a seller, great way to make some money if they're in the position to do so, where they're going to get a quick sale likely for that person coming in, interested to buy, and giving them the money to do so. However, there is risk involved for the seller if they are the one arranging the vendor take back, because you don't know that client's full situation. Are you experienced with lending? You know the ins and outs of that. So for both parties, very important to get independent legal advice, right? And for the buyer looking to get into that contract, that could very well be a situation where that client isn't in the best situation with either their income verification or their credit is in bad shape. So what I would say to the person taking, if that's the case, and they're taking on the vendor take back mortgage, then have an exit strategy, right? Know how to get qualified with your bank or a B lender if that's the case. Because sometimes, there's clients that haven't filed taxes for 5 years. I don't have, I run a good business, but my paperwork isn't up to date. So it could be a solution for a client to jump into the real estate market to purchase if that's an option for them. Still, of course, needing some down payment. But there's a lot of people out there that don't qualify for your standard or fall under those standard lending guidelines. And this could be a way of getting into the market, but have the exit strategy so you know how to move forward in other directions and get qualified, right?
Well, and I think the vendor take back, the VTB mortgage is certainly more of a commonplace in the commercial real estate world. You talk
Yeah.
about businesses, right? So, this can happen where a seller doesn't necessarily need the proceeds of the sale for whatever it is that they might want to do. So they're going to give that loan back to the buyer. And commercial funding is a little bit harder to get. There's usually more interest or higher interest rates involved and more down payment needed to facilitate that loan. So it makes it a little bit harder sometimes to get that financing, and a lender doesn't want to have additional mortgages on title on a property, right? So
Right.
the VTB allows the seller to take back some a mortgage, make a little bit of money in terms of interest on that loan that they're giving to the buyer, and it gives the buyer sufficient time, as you talk about that exit strategy, sufficient time to work on getting their ducks in a row so they can pursue the traditional loan or traditional mortgage, at the end of that the maturity of that VTB,
Of
right?
course.
So it does allow for some additional time to get your ducks in a row that way too. So
I had a
it's an
client.
avenue out there.
I have, and it depends on the market as well. Are things
Mhm.
taking a little longer to sell? I had a client do a vendor take back once to buy a property because they weren't in the position to list a house. They had another condo that was a rental. They were doing some work on it. They wanted to move forward with the buy, and there was a vendor take back option to make that work. And we knew that when the condo was sold, there was lots, there was ways to make things shuffle numbers around at that time. So they move forward with the vendor take back, and then they knew that they'll be in soon position to get traditional financing, right?
Right. That was an interim solution,
Intern.
to try and get the deal done at a timely
Yeah.
manner before the other property was sold, and they could again
And the
use those
interest rate
funds.
wasn't too bad, so good for her, right?
Yeah, no, absolutely. I mean, in those situations, you do need to have two very cooperative parties and
Yeah.
creditworthy ones. So it isn't, the seller still is it makes the most sense for them to get as much information as they can out of that buyer, try and secure some form of collateral, generally getting the property back, right?
Yeah.
If they default on paying that mortgage, you'll get the property back and then you can sell it again, kind of thing. But again, that legal advice is important
Legal
in terms
advice,
of how that's structured into the agreement of purchase and sale, right?
of
Um,
course.
yeah, so those are two more ways that you can secure a lower interest rate and thus lower monthly payment on those loans, or at least secure the financing that allows you to get the deal done again in the
Yeah.
form of that VTB mortgage.
Yeah.
Yeah. So, Alex, what do you got planned here? We are getting ready for the Labor Day long weekend. School starting next week. What do you guys have going on?
I've got my birthdays next week, so I consider this the birthday week.
Oh,
First
birthday
day of
week, not just the
school.
birthday day. Is it a
And then
birthday month at your house?
it's birthday week, I call it.
Okay.
So it's started, it's happening, and then we've got the dread of the day after my birthday. We are going to see what the Bank of Canada does with interest rates. So interested to see there if they hold or increase.
Yeah,
I'll do an
I'm going to
update on
put
that
my
one.
money on increasing 25 points. I don't want to be a pessimist or too much of a pessimist and say they're going to be going a half point. I think it'll be a 25 base point increase just with the way inflation went, but we'll see. They've surprised us before.
We'll see. We'll see.
Yeah,
Thanks for having
absolutely.
me.
Pardon me?
I said thanks for having me.
No, my pleasure. It's always good to chat with you, Alex, and learn a little bit more about what's out there and what options people have in the financing world. And we do a good job sharing that with people. So thanks again for joining us, folks. And thanks for watching. Subscribe, comment, send us a message if you have any questions. We'll be with you again in a couple weeks, and look forward to our chat then, Alex. So
Awesome.
until that time, folks, bye for now.